Welcome to Market Matters. I'm Khoo and I'm joined by Charlotte Chong. Charlotte, today a pretty quiet day. The market just 1705 up by 2 points.
Yeah, KESMI actually up only 0.12%. Volume was at about 2.43 billion, worth 2 billion ringgit. Now what happened was I think investors are still quite cautious about Chinese figures, about the slower growth in the Chinese market, and also be ahead of Budget 2016, which will be announced tomorrow.
Yeah, there's a bit of trepidation, but you can always tell a lackluster market by the width of the trading band, right? Just by 9 points, 4 up and 5 down. I think beyond doubt, other than Mario Draghi, Mr. Whatever it takes, in terms of the ECB meeting today, the big elephant in the room is really the Chinese growth engine and whether it's going to be sputtering. We saw Q3 GDP on the industrial demand side quite weak. We also saw how the Chinex and the Shanghai Composite had bad falls yesterday. Of course, rescued after market close by an infusion of capital by the PBOC. But the thing is, the region has also not seen very good news. I mean, you've seen Credit Suisse reporting worse than expected Q3 results. Net income was down by 24%. Pre-tax lost 125 million francs. That's pretty bad numbers.
Now, ECB president, like what you say just now, Draghi, is expected to keep the door open for more stimulus because of deflation risk. What about the regional market like Japan? And also Singapore and also, Australian
Well, I mean,
markets.
Japan, despite Mr. Abe's three arrows, you've seen a surprise trade deficit for September. Clearly, monetary easing is not working, but what else can central banks do, right? You saw export growth at the slowest pace in more than a year. These saw shipments to China, and China's a big growth engine. They saw those shipments also fall. So it's not been good, right? Not been good at all. Commodity prices have been weak as well.
Okay, we are talking about commodity prices, which is very important to a country like Malaysia. Brent actually edged up higher to $48.19 a barrel on the back of a weaker greenback. Now we look at USD versus Malaysian ringgit, it's still at 4.28, unchanged if you look at the chart from yesterday. Oil experts from OPEC actually made no agreement to cut production and lower the production, hence oil prices will still be under pressure.
Okay, so just to wrap up the regional numbers, the Shanghai Composite was up by 1.5% to 33,600 and in fact 3368.74 points. And Australia's ASX also recovering from yesterday, but just by a tad to those numbers. On the downer side, the Nikkei was down 0.64% to 18,435, and the Hang Seng down by 0.6% to 22,845. So let's move right along to the Hotstocks of the day. Hua Yang, this budget, it's the
Affordable housing segment.
It's the AirAsia of the property development world, isn't it?
It closed 1.1% higher at 1.83 today. Well, it actually announced recently their net profit and their revenue. Net profit actually up 10.4% to 28.7 million. Revenue up 8% to 150.6 million ringgit.
Yeah, I think the key thing to note here is at the halfway point of their financial year, they've only hit 35% of their property sales, and that's not good. And if you look at the share price for Hua Yang, it's down 15% on the one-year basis, down 9% year to date. And I think this overall weakness is consistent with the overall weakness of the property sector. So, even though they're in the affordable segment, they don't look to be doing too well.
Actually, TA came out with a report today. They say given the weak condition, the research house actually expects management to delay some of these planned launches to first quarter of CY16. And Kenanga Research, they are more optimistic than TA Research. Their sales target keep at 482 million, compared with TA Research FY16 sales assumption of 424 million ringgit.
Yeah, so I think you can look at it two ways, right? If you look at it from the point of view that earnings will be more choppy because you've delayed property launches, well then they will be choppy. But then if you don't release and you save it for next year, you've got a better chance of your inventory getting sold next year. So in my view, the management is doing all it can to somehow make it work for them in very tough operating conditions.
I think their business direction is still good. Is still positive because they are still focusing on affordable housing segment, which I think a lot of people still need houses, especially for fresh graduates.
Okay, so just to wrap it all up, Hua Yang, the affordable developer, having just reported quarterly numbers, just seen 35% of their full year, in fact 35%, which is short of the 50% sales target as at the half-year point. They also see the fact that they're going to keep sales targets unchanged for this year, but are doing what they can to mitigate a weak operating conditions, such as perhaps delaying sales launches, as well as perhaps addressing their building materials costs, which are now foreign denominated, but they're trying to get it to a local denomination in time to come. Let's also look at a couple of stocks with momentum. Now, this is basically KESMI Industries, or KESM Industries, a quite small contract manufacturer for the electronics industry. They are positive momentum by the Edge Research. They closed the day 4% lower to 490. But get this, over the whole course of the year, they've more than doubled by 104% year to date and by 83% on a one-year basis.
Actually, I wonder why the Edge Research will come up with positive momentum on this stock, because it has been rallying 105% year to date. But okay, let's talk about this company. This company actually provides testing services for microchips used in automotive sector, and it is actually the largest independent burn-in service company in Malaysia.
Well, I think it's because of earnings, right? Because if your earnings are consistent and they are riding the crest of a recovery in the global electronics cycle, then yes, and as well on the additional lay is if you're making your money in US dollars, then if US dollar is going to stay strong for at least the medium term, then you've got a good reason as to say, well, yeah, positive momentum.
Which we will actually see more room of growth in the short term or probably.
Correct. So in late September, you saw quarterly earnings, the fourth quarter, profit up by 57% to 10.5 million ringgit. Also, revenue up by 1.4% to 69 million ringgit. So basically, this company maybe has some legs to go. So there is where it is.
Now, when we look at in FY 12, actually their profit declined 60% on escalating labor costs in China. They have operations in China and also in Malaysia, but the profit actually rebounding in FY 14 on the back of recovery of global semiconductor sales. Actually, you can see across all the semiconductor players, you could actually see the rebound in all these companies, not just in KESM.
You could, but then you come on to our next talk, and it's Dufu Bhd, and this is a company which has been pegged as negative momentum by the Edge Research. They closed the day 3.1% lower, 33.5 cents. Now, they haven't done as well over the whole course of the year as the other electronics players. 26% up year to date, 45% up on a one-year basis. But they've been having some problems, this small player, in terms of their management and the chief executive.
You're right. There's some controversial issue in this company earlier this year, whereby there's allegations of unauthorized remittance of $1.01 million from these two companies called Dufu Industries Bhd and Dufu Bhd to US incorporated company. Now they say that one of these key senior officers in Dufu Technology Bhd, he is actually connected to this US incorporated company.
Yeah, and I mean, the fact of the matter is, after an audit by Ferry Hodgson, the chief executive left the firm, and then a new chief executive was brought in only to prove to be, I think, inadequate could have been a fair term for it, which has led to the former CEO being called in on a contract basis to advise and to help him along. And the company paid him 40,000, in fact, is still paying him 40,000 ringgit a month to train this new guy.
Now, the big question is, why would they actually rehire this guy as an independent contractor, to train, guide, and advise?
Very strange, and it's quite a bit of a pity because after 3 loss-making years between 2011 and 2013, Dufu should and could have been playing and rising and benefiting from the global electronics upcycle, but have not been.
Actually, when we look at the financial results, their net profit actually went up 1,200%.
Exactly.
And revenue actually went up 27.6%.
So they could have been making money, but they haven't. So to wrap things up, from KESMI, having earlier discussed them, this is a positive momentum stock. They saw profit up by 57% to 10.5 million ringgit in the latest quarterly earnings, and they're beneficiaries of the weaker ringgit. As regards Dufu, they've been pegged as negative momentum by Edge Research. They were recently loss-making from a 3-year stretch between 2011 to 2013, but their shares have not done as well as other players because maybe due to the management shuffles and the financial allegations earlier this year.